Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, amazing day yesterday. Nifty has hit a brand new record high. When the entire global markets have been negative, Indian stock markets have reacted totally different and has actually rallied big time. So that's something amazing. In fact, the interesting part was the FIIs are back in action and they bought for more than 1,400 crores yesterday. So, is the market going to rally up further? That is a big question at this point of time. Well, if you look at the kind of market at this point of time, it's like the FIs were actually selling the last entire month, and still the market went up. The market entire positivity was actually brought in by retailers, and even the DIAs have come in the form of retailers. That is example, like for example, the kind of fund that actually is being invested into mutual funds have actually gone the record high. The equity mutual fund investments in SIP mode has touched record highs in India, and that is an amazing figure, and that is actually taking the market along with us. So DIIs and retailers are the only reason, or I would say simple, it is the retail power that is seen at this point of time. Because just in 10 days, the market actually took over the entire fall which was there in 46 days. So that is something amazing. So, of course, all investors who are invested in the stock market would be really happy about the way the market is going. But then, is that going to continue the same way? Well, over a longer term, I've always been really bullish about the market. But for the shorter term, markets have actually rallied too much and it has to have a decent correction. It is something very important because if that doesn't happen, markets can actually get into big trouble because a continuous long rally and then all those people who are sitting with good profits, when they start selling together, the fall can be really big, and that is something which I don't want to happen. So there should be some decent correction at this point of time, which is I expect, but then of course markets can never be predicted. Apart from that, if you look at the US market, yesterday the US markets have kind of bounced back slightly after continuous selling last week. So that is actually a good thing. But then, of course, the market now would be looking forward to the US CPI data, which will be coming today. Sorry, not today, that's tomorrow, Wednesday, and day after tomorrow, the PPI data. So these are two things which market should be cautious about. And because of which, the market should actually take a break. But then Indian market, the way it's going at this point of time, it is not connected with any of the global cues. So we really can't say what is really happening in the market. At this point of time, to be frank, it is a kind of confusing state of market at this point of time for India because there was no reason for the markets to actually go up. Probably it is just the G20 positivity, but then this is just too much. So this is kind of in my entire stock market career, kind of, I have not seen this kind of situation where there are no global cues, there are no local cues, and still the markets just go up. So this is exactly, this is why if you see, yesterday the markets are going up, the VIX also is going up. This has been a concern in people's mind. What is going to happen in the market? How much more can it rally? So everybody will have this in mind. So everybody is just waiting to book some profits. So that is something which is not a great time to be entering into the market. So if you are going to enter into the market, I would say no, hold on, because this is not a time to be entering into the market. But then if you are going in SIP mode, that's completely fine, but not on a bulk investment, definitely not a time to be invested at this point of time. So we can see some correction when that happens. Probably we can go again into some investment, but then I'm just glad that when the markets went to 19,200, we invested really well. And at MP family, we are sitting with some amazing profits there. So that is something which can be really happy about. So for today, of course, the focus. So Reliance, kind of the positivity yesterday, if you see major positivity actually came in from Reliance. HDFC Bank did support, but Reliance led the market to all this high. So if Reliance is going to take some break, that is something that's going to affect the market. And today is also Fin Nifty expiry. Do remember that. So markets can get really volatile, and since Nifty has also rallied up so much, will that see a correction? That's a big question. So that's something which a lot of people are looking forward to. So that way, if there's a correction, that could be a good thing, is what I would say. So at this point of time, the markets can see a gap up opening today, but then will that gap up sustain? There are very less chances, but if it sustains and still moves up, that would be a totally a surprising thing. So let's see, market should see a consolidation at this point of time, at least some correction, or at least a consolidation, a sideways movement is what I'm expecting at this point of time. Let us hope the market to be sideways at least, then probably we can expect some more positivity. But if it takes a reversal, again, a level to be watched would be around 19,900. If 19,900 is broken downside only, then we can expect some bearishness. Otherwise, 19,900 can be good support to start for the next rally. So these are things expected from the market at this point of time. So it's a great time for investors. All those investors who has invested in any mutual fund, especially unless you've gone for a theme mutual fund, you will be sitting with some good, decent profit at this point of time. So not just mutual fund, direct stock investment, wherever you invested, I'm sure all of you are sitting with great profits. Wishing you all a happy day. But then, of course, like I've always told you, such situations are when you have to deleverage yourself. So if you are leveraged, ensure that you're deleveraging yourself at this point of time. And that is, if you have taken any loan or any pending fund from anywhere to invest, take it out. This is not a time to hold it. Risk to reward ratio is not great at this point of time. So stay cautious. So that's it for now. Being a Tuesday, the podcast was slightly early. Looking forward to catch up with more details tomorrow morning. Goodbye. Have a great day. But before you leave, of course, I've been forgetting this for a few days. Do press the like button and do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye. Have a great day.